Mindful Investing. The markets are trying to rebound, but the big question remains, is this just a short-term bounce or the start of a real turnaround? With ongoing tariff tensions, it's hard to say. Some countries like Europe and across Asia are working behind the scenes to make trade deals with the US, but the uncertainty remains high. So in today's video, I want to talk about what we as a retail investors can do in times like these and share exactly what I've been doing. From buying on key support levels to selling options and organizing my portfolio for long-term strength. Let's address the elephant in the room first. The market is green today, but tariffs are still a major threat. Reciprocal tariffs can really shake up global supply chains and corporate earnings, especially for tech and industrial stocks. While some countries are negotiating, there's still no clear resolution. That's why I don't chase green days. My strategy is simple. Buy on red days and relax on green days. When the market is red, that's when opportunities open up. And during this dip, I took action. I made several buys at my key support levels I've been calling out in my recent portfolio updates. These are high conviction buys, not just the random dips. Here are a few examples. I bought 100 shares of SCHG at $21.80, bringing my average down to 24.88. Now I totally have 321 shares of SCHG. I also bought some other stocks like CRM, Google, Amazon, Uber, Snowflake, and many more. And I also did some options. Some of these have dipped further, but that's part of the game when you're investing long term. You don't need to catch the exact bottom. You just need to buy great companies at reasonable value. I also sold a put on Broadcom at $115 strike price and collected $100 in premium. This is a great way to potentially buy the stock at a cheaper price while getting paid upfront. Since the market is green today, I'm also looking to sell covered calls on stocks where I own over 100 shares. I'll probably sell covered calls on Broadcom, Lam Research, and Vertiv Holdings. My goal with call options is not to have my shares called away. So I usually pick out of the money strikes and that I consider of low risk. The goal here is to generate passive income while holding stocks I already have. One of the biggest mistakes retail investors make is this: they sit out during the dips and try to buy back when the market recovers. That's completely backwards. We know our companies. If we are confident in their fundamentals and have done our homework, the best time to average down is during red days, not after a 20% recovery. Right now, I'm still down 9% year to date, and that's okay. I've taken this opportunity to reevaluate my portfolio. I built this Excel sheet that helps me visualize my strategy. Green colored stocks are high conviction, long-term holds and strong growth potentials. Red colored stocks are slow movers or short-term bets I plan to exit when the market recovers. These red stocks aren't necessarily bad. They are just not the best use of capital in a potential recession. I'd rather redeploy them into high quality compounders than bag hold stocks for years. Just a quick note, this doesn't apply to dividend stocks or ETFs like SCHG, SCHD or JEPQ. Those are part of my long-term income and growth strategy. I've also been working on another project, a stock prediction tracker that covers over 100 stocks. This tool compiles all my 1 year and 5 year price forecasts and helps determine whether a stock is a buy, hold or sell. You can pause the video anytime and look at my predictions for stocks you own. I've covered names like Nvidia, Apple, Palantir, SoFi, Uber, AMD and many more. Love to hear from you. What stocks are you buying during these corrections? Do you agree with my strategy of buying during red days and relaxing on green days? And if you have got any interesting picks, especially under the radar ones, drop them in the comments below. If you'd like to check out the full breakdown of my portfolio, the link is in the description. So just to recap, don't chase green candles, buy only on red days, sell puts on stocks you want to own and sell calls on stocks you already own 100 plus shares of. On green days, use tools like Excel and stock prediction trackers to keep your plan structured. That's how we stay disciplined, data-driven, and focused, even in uncertain markets. Make sure to like, subscribe, and hit the bell icon if you found this video helpful. I've got more updates coming soon, including new stock predictions and buy or sell levels for key names in my portfolio. Thanks for watching, and as always, invest mindfully. I'll see you in the next video.